In this video, we'll provide a case study on using the RDA, that is the RexDog average. It is the yellow line that you see here on the chart. There is a link down below that links to TradingView. You can add this to your chart. This is the foundation of my trading system. It is my bias indicator. In this video, we'll primarily use this and talk about why, really since around March 14th, around March 13th, I should say, was calling for a swing long position in Bitcoin. Not only does the structure of what's on the just basic daily price action really say that that probably is the right trade, but if we look at specifically the yellow line that you see here, that is the RexDog average, and we look at specifically why you would be open or more open to being long on Bitcoin given some of the signals that it's provided you. So let's just first talk about when it officially crossed the actual yellow line, which is the RexDog average right here. There is no reason at this point in time that you really should have been long. If you were just doing a fade, expecting a check back to the momentum indicators up here. That's really the only reason to be long. Other than that, with this candle here that preceded it right here, and there's a description on how to use the RexDog average and how it's built. I haven't really gone into the history and all of the backtesting across all markets, all time frames, all chart types. The reason why I chose the numbers for the RexDog average and why it holds up very well, but it does. So I'll just lay that as an aside. Now, for completeness, I should say that this candle here was the first candle that you got a clue that there was a breakdown in Bitcoin. The short side you should be very highly open to. This candle here was really the official shot across the bow, so to say. This was the confirmation. So that's the way to look at this price action. Anybody that's in my membership, that's bread and butter reading what happens with intention and the RDA. Now let's move to present time. Let's talk about present time. And we're just going to step back here and we're just going to talk about present time, which is we have a sell-off here. Really big support there, right here, right around 41.4. And then from that, the price action, the reaction from that sell-off really comes back and tests the RDA. We have one minor close above it. This is the first test of the RDA on the downside. We have highs above it, but it never really closes above it again. So that is a confirmation that we should remain short, bias short on our trades. As we come back here and we look at the next RDA test, what do we have? This is building the narrative, okay? We have a close above, barely. We have follow through with indecisive action. We have probably a candle that trapped a lot of people going long. If you were trading with the RDA, you wouldn't have gone long here. You would have waited for confirmation because that's barely a close above. And if you did go long, your level of short is really at this breakup candle here. This is a minor breakup candle. Your short would be that level right there. That level holds multiple days on multiple lows on lower time frames. This level right here. That's the first break of the RDA. What's the rule say? Well, for members, I'm going to talk to you specifically. What does the rule say? Should really be repeating that back to me. That level breaks multiple times on lower time frames, and if we were to drop down to the 1 hour, 15 minute, 30 minute, we would see structure breakdown here. We would see momentum short indicators, and it would show us that this level is not holding. Now it didn't last long because it came back and checked the momentum indicators here, as we see here, retested the RDA, had a close above. That might have been a signal on follow through that maybe you would look at potentially going back, outlining some key levels of this candle, the price action on the lower time frame here, and then look at going long. But then ultimately, what do we have? We have one final RDA test and a sell-off. Okay. Now that sell-off came off. You know, one of the things I say in my videos is you got the three questions. Where is price coming from? I don't know why it grabbed that part of the candle or that part of the arrow. Where is price coming from? Where does it want to go and how does it want to get there? Well, right here, when you hit this low, that's where price is coming from. You should be asking, why did it stop there? Should be looking for multiple reasons why it stopped there. And that actual reaction came back and closed above the RDA. And what do we have here? This is where it's a little bit different. This close is a little bit different than what we've seen in successive closes so far in the narrative downside of Bitcoin. We have a solid close above. That's a pretty solid close above. It's a decent close above. We have a follow through candle with a close above, stopping at a key level. I mean, if this is just standard support and resistance, any one-day trader that's just learning to trade will clearly see this as that's resistance. And okay, well, that's where price stopped. Now you might be saying, no, it didn't stop there. Yeah, it did. Look at the close. See, the closes are what I'm talking about. Of course, there's information in the highs and the lows, but where did it close? Closed below the level. Where did it close? It closed below the level. Now, from the narrative of the RDA perspective, we have 1, 2, 3 closes above the RDA. And then, where does this candle close? This candle closes, it's a hesitation sell-off so far. Up until this point, it's a hesitation sell-off. It closes in the top 75 percentile, real close to, kind of at a key level there. Not close, I'm sorry, it did close there, but the low as well. This price action, half of the price action of this candle is, if we look at this, I'm kind of giving, unfortunately, so I apologize. I'm giving, quote, a masterclass in the RDA reading, but also how to look at price action in the aggregate. Where did that close? Well, we see here that close kind of, if we take this full candle, I'm not going to go too far on this because I don't want to make this a long video. Take this full candle and let's use actually the other indicator. So I apologize for fumbling a bit there. Where did it stop? Strangely, I don't know why, it stopped right at the 75% of this overall candle. Strange. And then it closed right between kind of the 75% percentile of this candle. Now, ultimately, what was the follow through there? Well, the follow through was a sell-off. Okay, so we're really getting into the weeds there a little bit. But I say that because what you're also looking at it, you're looking for clues. You're looking for clues. Okay. The RDA is a bias indicator, and you're looking for intention. There's an axiom in the markets that I've heard before. I don't know where I heard it, is that if it prints there, it will trade there. And what does that mean? Well, what that means is that it printed here. So there's a likelihood that it will trade there, meaning that it will actively trade there, not just touch, but trade there. So same on the downside. It printed here. There's a probability that it will trade here. Okay? So if you're looking at your immediate swing highs and swing lows, that's your immediate swing highs. I mean, if you really want to be, you would go here. But I would use this whole area as it's printed there, it will trade there. It's printed there, it will trade there. Now we also have the mixed 200 average up here. But let's get back to the RDA. So we're not distracted. Sold off, sold off. What did it do again? Let's look and see what it did. Sold off, sold off, sold off. Simple support and resistance. Where is price going? Where is it coming from? How does it want to get there? Well, look. Simple levels. You have simple levels. You have minor structure being built here on the daily time frame from the lows, from the long side. Simple level held. Simple level held. Simple level held. Okay. Within the narrative of what we've been talking about. Within the narrative of we have an RDA break, minor close above, and major break with RDA close above, and then another touch of the RDA. What do we have right now? we have another touch of the RDA. But let's step back. Let's actually bring the chart back here. Let's go back to this day here, March 13th. Let me talk about why on this day, especially on the next close, I was talking about this is a great risk-reward long trade. It was a great risk-reward long trade. Not here exactly, but this was from the narrative of not only what was the system telling me, but also it was the narrative of what had happened in relation to the RDA. We have successive positive closes above and then touches. So if we go to the next candle, and this is really where I started talking about, okay, this is a good risk reward trade. Why? Because if we just take straight up structure, straight up just standard support and resistance, it's very clear in a binary type of decision where your stop losses should be and what should and shouldn't happen. That's your downside immediate level. Your more important immediate level for the longer term narrative is here. Those are your very important levels. Only things you have to worry about if you were looking at the chart on this day, I'll make it a little bit more perfect. On this day, the only levels on the downside you really should be concerned with. Nothing else matters. On the upside, you have two. You have one that aligns with the RDA closely. And then you have this whole level here. It's really why I said on this day, really, this close, great risk reward trade. Because on the long side, you've got about you could choose between 2 and 6%. And you've got at least probably an 8 to 20% upside. Because if you went just long there, 8% is a very aggressive stop loss. 3% is probably one that most people could stomach if they're doing swing trades. Your first upside target that you have at this point in time is about 11% away. Your next upside target is 18% or so, 17% away. Your ultimate target, if you were lucky enough to time that bottom right, is the number that I've been talking about for a while now, which is 50,000, which is right here. This inflection point and this RDA test here, pretty much between here and here is meaningless noise for the long-term perspective of whether or not Bitcoin's going to get to 100,000. It's noise. This is all noise between here and here. The second we start getting successive closes above this area, 50,000, decent successive closes, is the only time, well, number one, that will be the time that quote-unquote normies, for those people that are just heavily into crypto, will probably start paying attention again. And that will fit the criteria for as long as the shorter term momentum indicators are remaining strong and it's above the RDA, it will fit the criteria for at least a high probable test of the highs, at least. Given what else is going on, that's how you would make that assessment. But from here, from this area here, it's a very binary decision on where you're wrong. I mean, it could spike down here and you could be wrong, you could be taken out. Maybe you start over if it comes back to this level. But at this candle here, you have very clear trade and structures lining, carrying the narrative of the RDA forward. And of course, we know what happens. I mean, what happens is basically it comes up, and now we're at a very indecisive period of the chart. Indecisive in the way that it's not really indecisive if you're trading the system. If you're trading my system, the momentum indicators so far have held. They have held here so far. You should have, if you entered down here, booked some profits at the RDA, because what's the probability there? Well, there is intention being shown. I don't know why it's not grabbing that end. There is intention being shown that it wants to actually truly break the RDA. There is intention being shown. But you're going with probabilities. Probability is it's going to stall at the RDA. It aligns with another level. Book some profits. Or move up your stop loss. If anything, you'd probably be about here. It's probably where you'd be at if you don't want to book profits and you want to just hold it and see what happens. That's probably where you'd be at. Give it enough room to kind of test the momentum indicators like it's doing now. See what the close will be today, and see what the follow through will be thereafter. Got the overnight session here. It's 1600 or around 1600 my time. So we got the overnight session here, and the close, obviously this candle that we have to contend with. But that's really the way to look at this. So that is really a case study in using the RDA. And the other thing I would mention is the indicator that's available to members down below, which is the RexDog Market Bias Indicator. It's really an oscillator. You notice if we make this bigger here, you notice on this indicator here, what did it do? I have to probably draw in that indicator. So let's go in there. So what did it do? Well, on that same day we mentioned, it crossed over multiple momentum indicators here and held it. It also crossed over the 25% red area into here. And then here it crossed over the 0 area. Now on a pullback, what are you looking for in this indicator? You're looking for exactly the type of behavior that we're seeing right now, as opposed to this behavior here, where you see it go here. And then what this indicator is, just for those that don't know what they're looking at, it's an aggregation of my system into an oscillator with some weighting rules. So that's really what it is. And it's really used as a confirmation indicator. So you'll see here, it broke through all of that and then went down and tested these lows here, which is another great area to do some fade trades, because you've got previous bottoms here and your previous bottoms have been tested. So it's another great area. But what we want to see here now for this price action to hold up is we want to see really the indicator the way it's printing right now to maintain, and for this line to be solidly above this, at least this level here, and then in the green. And then to take out some of these levels here. That's really what we want to see. You want to see it take out some of these levels here. So if it takes out these levels here and then starts trading in this zone, it could be in a heavy long momentum environment. So there's additional confirmations here that are happening. Of course, price action has to hold here this next day and day or two for the break of the RDA to hold. That's really what you're looking for. We're at a point where it's failed. So right now on a lower time frame, you're probably momentum short. You saw the momentum short signals here, but you're probably in a changeover time. And let's just do this for completeness. I don't want to make this video too long. For completeness, if we look at what's happening here, let's remove everything on the 1 hour time frame. Kind of exactly what I said. What do we have? So, well, we really didn't go momentum short until here. On the momentum indicators, went momentum short here, but still biased long because of the RDA. Came down and tested, stopped at a high reaction area, the mixed 200 average. Okay, fits our model. Stopped at the kind of middle of a range area here, a little bit on the lower end. Held up so far, but now it's really indecisive, but it's starting to switch over or stay momentum long. It's recaptured the RDA. So right now, as long as the overnight can maintain the same look, should be very obvious to you what levels are important. I mean, this is very obvious levels. That's your downside level to watch. That's your upside level to watch. Very obvious. Very binary. It's pretty binary right there. That breaks, holds below, it's probably going lower. That breaks, holds above, it's probably going higher. Pretty simple binary support and resistance there. It's printed up here. It's printed down here. It's 50-50 where I can go right now. You're in a no trade zone right now. shouldn't be entering here. Shouldn't really be doing anything until it tells you what it's going to do above this level or below this level. Till it tells you what it's going to do above this level or below this level, there's nothing to do. You could trade maybe lower time frames, but there's nothing to do. So I know I strayed a little bit there at the end, but it wouldn't be my typical video if I didn't stray a little bit. So that's all. Look, if you're interested in a high probability momentum following strategy that trades both sides of the market, works in any market, you'll want to join my Discord and ask how to get started in my membership. It's $997 one-time fee. Get access to all my training, all future indicators, all current indicators, all private indicators. You get access to everything. Private channels on Discord. So if you're interested in a trade system that, and I show it day in and day out in my Discord channel. If you haven't joined Discord, join Discord. I say today, let me do this because I'm going to toot my own horn a little bit. We pull up Discord here. This is my NQ conversation today. I provided a literal masterclass on trading the NQ today. The calls were, I'd say 80%, if not 90% spot on. Provided examples, provided my exact trade areas, provided exactly my projections, provided some positional trades where I was in positions, where my entries were. I provided some charts here, some areas, especially here, some context to what was happening with price action. We see here I'm showing my 2 chart setup with multi RDAs, which is a private indicator for members, and then also a VWAP analysis. And then here, as we get further down, one of the good things, or not one of the trades that I provided, I should say, was a kind of an end of day trade here. So this is a good end of day trade that provided some good setups. And then I really traded that into after the close, got out. It's a great P&L builder. But really everything I provided here was pretty much a masterclass on trading the NQ. So if you are interested in, and I do some of that obviously in crypto and everything else, but really if I go back to this, in crypto, unless you're trading and you're scalp trading in crypto, it's binary decisions like this that you need to get to, because that's the only thing that matters. And what you do below this level and what you do above these levels is actually the trade opportunities that exist. There's no trade opportunity right now. It's 50-50. In fact, it's actually momentum short as I talk about this now. So probably the aggressive trade would be to go short. I just can't stop myself. The aggressive trade would be to go short. But, once again, it's 50-50. It's a no trade zone. Whenever you're in a range, it's a no trade zone. That's all. I got to stop. I'll look forward to seeing you in the next video.